Lending to micro enterprises, first thing you should recognize that around a year back, the definition of MSME has changed for priority sector loan. So Ministry of MSME has included retail trade as MSME for priority sector, which is a transformative change, and not many people have understood the power of that. What it means that earlier a shopkeeper in a tier 2, tier 3 town couldn't access a priority sector loan because he was not classified as an MSME. Now every retail trade in India is an MSME. So this 6 crore plus MSME which is getting reported, this population would explode now to more than 10 crore, because every retail trade, whether it's a shopkeeper, bakery, small businesses, they are all of them are MSME. So that's why there is an explosion of credit demand would happen. Now the collateral type, whether it is property or anything else, is linked to the, what kind of risk which you are taking. And over a period of time in India, there is a journey of from collateral to cash flow based lending is happening. So the data ecosystem which is happening, and it is started from demonetization and then the advent of GST and now digitization of banking and maturity of bureau, wherein lenders now have the power to understand the cash flow from these data sources and lend against the cash flow. Because earlier, 5 years back, you go to a small business and you ask what's your turnover, what's your expense, what's your margin. Nothing was available because everything was in informal segment. More and more MSMEs, when they embrace the GST and they embrace the digitization and banking, their credit availability would increase. That's why this overemphasis on collateral by property for loan would gradually reduce. Today, lenders, because traditional or lenders generally are using property as a collateral to secure themselves in long run, but over a period of time there is a change which is happening. Bank as a business model and NBFC as a business model is distinct from one particular angle. Bank also have to create physical infrastructure to get deposit, use that deposit to provide credit, right? Because for bank to provide credit, the liquidity flow comes from these retail branches where deposit comes. Because mobilization of deposit is a factor of trust. Trust in India comes when somebody sees a physical infrastructure, a brand, a place to go. And that's why banks are in the mode of increasing their physical infrastructure, not necessarily only from the advances side, but also to increase their liability franchise. You would have seen recent report that the credit demand is so much, and it's not that the liability side has grown. So the deposit growth has not been equal to what the credit growth have been. So I don't see that banks increasing their physical infrastructure in any way is a hindrance to the collaboration which happens between the NBFC and the banks generally. Because NBFC, especially which are data oriented and tech oriented, they served a market segment which is their specialization, which is what we call the underserved and unserved market. And banks, as the owner of the liability franchise, the deposit franchise, find it very meaningful to collaborate with these NBFC and use their deposit franchise to take the asset on their balance sheet. So actually it's a welcome move that banks should increase their infrastructure, they should increase their liability franchise, and more such partnership would start happening, because they also have to port asset, and actually economically also it makes a lot of sense for banks to partner with NBFC and originate asset through them rather than necessarily to do all of it on their own. Yes, this is an age-old question, right? NBFC not having the deposit franchise are dependent upon wholesale financing, which means NBFC has to go to the bank, take money from the bank, and then use that money to give to the customer. And depending upon how and what kind of environment we have, so we have seen starting from an ILFS crisis to DHFL, bank had resistance to lend to NBFCs, right? Because they were fearful that while they give the money to an NBFC, the money can be utilized for anything, multiple things, and that's why the end purpose of giving that money to NBFC would not be done, and banks would have to ultimately suffer. But I think so there are transformation changes which is happening in the Indian market, especially in the NBFC and bank collaborative space. So there are multiple guidelines starting from 2019 has been put in force, wherein regulator has recognized the need of collaboration between NBFC and the bank. They brought the guideline of what we call the co-lending, which means bank can access to the end customer by using NBFC in a co-lending model. So which means that NBFC not necessarily have to borrow on its balance sheet, rather it can originate the customer, 80% would be funded by the bank. And I think so in next 3 years this would explode and become very, very big. Simultaneously also now digital lending guidelines have been pronounced, wherein also the collaboration between a large NBFC or an fintech can also done, and that also would explode the credit. And obviously there is capital market. I think so we are coming to a place. If you look at in last 4 years, we started 2018 with ILFS, then we looked at DHFL crisis, and then in 2021 of COVID. The combined impact of that is that the liability to NBFC has remained a challenge. But as the economy would grow, the credit demand would go, and the deposit in the banking sector would start growing again, you will see the liability franchise in these new models of providing the liability would start growing again. And to some extent, to remain in this challenge of not having liability is also good. India is a credit hungry country, right? Our credit to GDP ratio is lowest in our peer set. Sometimes lack of availability of fund makes sure that we write proper credit and don't create potential future losses. So it also calibrate the growth because we don't have that much of money. But I think so over a period of time, I'm very hopeful that this would start releasing much bigger than what we are seeing today.